started. We'll let the others get here and in the room. You know, technology is always great. And we're, of course, having some technological issues here this morning. So we'll chat here just a little bit. And I know those guys will probably be able to get in here and get joined with us in just a few minutes. But I want you all to be able to get ready and grasp some material, because next week we've got holidays. The market's going to be closed. I know you know this. Well, a lot of people are heading out today. Got lower volumes in the market. A holiday on Monday. You know, markets up and down closed, up and down volume, the holiday the following week with New Year's. So, but there's a lot that's going on, and we're going to talk a little bit about that today with, and not only today during the 12 o'clock session, but I'm also going to be talking about it at 1 o'clock. So I'll just go ahead and make that little plug now while we're waiting for Jeffrey and Guy to get into the room. So join me, because we'll continue that conversation. And it's not so much something that you have to be glued to the computer about, but that you just need to be aware of, so that whenever you come back to trading, whether you're going to trade next week or into January, you're going to have more knowledge and more tools ready to go after those markets and do that. And here they are. Now I can stop talking about them behind their back. Graham, we can get started. We don't talk about them anymore. We got Guy Cohen. We got Jeffrey Turnmeyer. Welcome, everybody. Say hello.
Hello.
All right. We did have Guy. I think there he is.
Fingers. Sorry.
You are good. You're good. So, all right. Well, let's get the show on the road. I'm just going to share a screen here real quick. Hello, everyone. Santa's on his way. Yeah. What's going to happen in the market? Well, I thought I was sharing the screen. What did I do? Share screen. You cannot share the screen. Oh, thanks. Okay. So we'll have to go in order. Let's see. Let me try this. And I was only really just going to share this to show that we do have markets going on. And it was just interesting because of the big markets, the NASDAQ, the Dow, and the S&P 500. I just noticed that today the Dow looks the strongest. So I thought, well, what's going on in the Dow? And these are this is just a picture of some of the stronger stocks on the week, just on this week as we go into the holiday season. But while we're on that real quick, just let me just say that there is risk in the market. You all know it. We know it. It's not easy out there. We work hard to make money in this market. And that's why we come back week after week. We try to share tips and tools that we're using that help us do just that and help to minimize our risk and help us to get on that right side. And we're trying to share those things with you. We don't have any guarantees, none of that in the market. So you can lose money. You want to make sure you understand whatever you're trading before you ever click that mouse, because you want to be able to always have money to come back with and trade on any given day. But that's just a list you can take a picture of, and I'm going to stop sharing that right now. We'll just get to our faces here and say, hey guys, let's just kind of start the conversation. First of all, with, next week, we got these holidays. How should people be approaching next week? What do you think, Jeffrey Turnmeyer? With a holiday.
There you go. Traditionally, Thanksgiving week and Christmas week and New Year's week being holiday weeks, it's always low volume, a lot of window dressing going on, particularly in Christmas, New Year's timeframe. And just after the new year, everything's like a clean slate for all these hedge funds and stuff like that. So you have to remember what they're doing right now is trying to clean up their books and everything. So those new newsletters and updates that go out first of the year are, make them look good. And then they start positioning themselves for the new year and what's going to take off. So we could see a shift in the market, I guess you would say.
Yeah, it's going to be interesting. What are your thoughts, Graham?
Yeah, I mean, kind of similar to Jeffrey. I'm still, I'm loving this rally, and I think we continue. We might get some sort of slight pullback here in the new year, but I'm still full on bullish. I'm loving that Powell came out and hinted at the rate cuts. Because if you would have asked me before the meeting, I would have said no. He's going to come out and say things are going great, everything's going as planned. Why would we touch the rates? But I think the market's getting pretty excited about cheapened rates next year.
There we go. Good stuff. Guy Cohen, good to see you back in your office, and glad that everything's functioning back. And I'm really super glad that it worked out that you could come back this week, because we know you had a lot of value to share. So, what are your thoughts going into next week, how people might look at the markets?
Thank you. So look, it's a Christmas week. So as Jeff said, that there's a bit of cleanup and all that kind of stuff going. The way I see it is this: we are overbought right now. We will have a meaningful retracement, but that's what I think it'll be. I think it'll be a retracement sometime in early Q1 is what I'm looking for. I'll show you exactly what I think the market structure will be. And we're pretty good at this kind of thing. And then that pullback will give us a lot of opportunity. So that's what I'm looking for, because you can't keep going, parabolic like this, particularly on the indices. It just doesn't happen. It never happens. It won't happen this time either. So there will be a flushing out. There will be profit taking. There will be, just because interest rates are possibly peaking on the way out doesn't mean we just keep on going exponentially up. It's never happened before, and it won't happen again now. So I will show you exactly what I think the market shape will be over the next bit. Now, obviously, I put my neck on the line, and you can see whether I'm an idiot or not. But we're really good at market timing, and there's such a thing called market structure, and we will have a pullback. It will be meaningful, maybe 8%, maybe a bit more. But after that, I do expect 2024 to be a bullish year overall as well.
All right, great. Well, we are really good at putting our necks out there. So let's keep at that, and let's keep doing that. Let's talk a little bit more about January. And you guys have all alluded to some things there in January. Maybe get a little bit more specific. What are you thinking? What should traders do kind of first week getting back in January? How should they approach January? What is your approach to January? What are you thinking? A little more details, maybe some specifics. We'll start with you, Jeffrey.
Yeah, so right now I'm kind of focused on the fact that the spot Bitcoin ETF situation is about to get approved. Fox News said they have it on good authority, I guess you might say, that the SEC is telling them on or before January 10th, we're going to get a block of these ETFs get approved. And that's going to create instant supply, that disappears out of the Bitcoin market. It's just going to get soaked up and sucked up into these ETFs. And as money flows into that situation, we could see an exponential run on Bitcoin. And that's kind of what's got my focus through the first couple of weeks of January, really. Then we got to reevaluate, because we have the halving event coming up later in April. At this point, it's kind of firming up for April 19th, 20th. It'll be flexible a little bit based on the mining and the block mining rate. But as it gets closer and closer, we'll have we'll firm it up to the hour and then to the minute of when that halving event's going to occur. And that's where the miners get paid half as much for mining a block of Bitcoin. And so that's less supply hitting the market. The 4 times before, it's all been, super duper bullish, because creates a lot of excitement in that market. And that'll, so we may go through a lull. We may be buy the news on the Bitcoin ETFs. We get an exponential run. We may come back to earth a little bit. And then we actually get, something that takes off into 2025, 2026. But we'll see where, one step at a time. We'll see where we get to first. So that's what I'm paying attention to into January.
Excellent. I want to hear more about that here a little bit later on, and anything else valuable. It is super valuable when you open your mouth about all that. Graham, what are your thoughts? January, take it away.
Yeah, I think right now we have a pretty cool little breakout going on with the small caps. Like I kind of mentioned before, loving what Powell had to say about interest rate cuts coming. And historically, the smaller companies are the ones that suffer the most when we have those high interest rates, because their debt expense is so high, they can't grow at the rates they want. But now they're going to be able to expand and grow much faster. And if you look at the IWM compared to the other indices following any bear market, they have led every single time on the way out. Now that didn't happen this year over the last year, and it's because we almost had like an inverse. Normally you get a recession, then they're cutting rates into the bear market, but this time they were raising rates into the bear market. So I think that's why we missed out on it this time around. But I think now that the rates are going to come back down to earth, we're going to see those small caps really boom. And I shared it in my Telegram. A cool way, I think, to play small caps is TNA is the ticker. It's a triple leverage small cap bull shares.
What is that again?
TNA.
Mm-hmm.
Now it's not perfect. There's a little bit of a decay. It lags the index a bit, similar to TQQQ, if you're familiar with that. But what I really like about TNA is if you're looking at those like leap longer term options, you can get a lot better bang for your buck on those right now than IWM. So I ran some pricing on them. If you're looking at the January at the money calls, they're about half the price for an implied move as IWM. So if we get a good move in the small caps, I think buying IWM is great. It's awesome, but I think the TNA longer term calls are a much better bang for your buck if we do get that move.
Interesting. Very good. Well, I like what you have to say, and I like what you were saying too about that small caps, and very insightful. I think you probably had a really good teacher. Guy Cohen, tell us more about January, what you're thinking, and feel free to just take it away too. And I know some people were even kind of typing in some questions there to you, Guy. Get a little bit more specific with this and share with us.
Okay, so January will be like any other month. I'll trade what I see. Nothing else. It's all I ever do. I'm not going to try and make predictions. I'm just going to trade what I see. Now, I don't know how long I've got, but I'm going to whiz through some things. I've got something very special to show, actually. Let me show something first. I just want to show you this. I don't know whether you recognize this person here. There she is. Look at that. Who's that? Who's that?
There you go. I recognize her. I might be related to her
thought you
too.
might like that. Satisfy some ego there. Right, let me just whiz through because I was going to talk about being a lion and not a headless chicken and a quick market outlook. I won't introduce myself, but it's all about being patient and waiting for the right setup at the right time. And of course, there are lots of different setups, lots of different strategies. I'll just show you what mine typically is. My fundamental way of looking at the markets is through market timing, and then stock selection, and then the trade plan. We won't go through the trade plan today. But if you think about it, if you can get market timing really good, then that means not only can you trade the indices like the IWM, TNA, the SPY, Qs, DIAs, and the options on those. And what I would say on the options is on the 1X, you will get much lower implied volatility. So you will pay more for the option, but you will pay a lot less in terms of implied vol. So the leverage actually ends up being more for the 1X. You'll pay more for it, but the leverage is more as well. Just a little different distinction to make there. Now, market timing is great because you can make money on the indices in a cheap way through those indices, ETFs, options as well. But also you can then trade stocks that correlate well with those indices and get even more bang for your buck as well. When it comes to our market timing, if you look at the arrows corresponding to what happened to the market, that was what we were saying. And then if you look at these arrows, just take one where I went bullish at the end of October after a little mini breakout and just literally spy deep in the monies, 70 delta March calls were going at 32.56 with an implied vol of just 22. So you're getting some very decent leverage. You look at the leverage multiple that we're getting there, 8.42. So Graham, one thing that you and I can do is we can compare that with the triple SPY on that one and just see what the options, you'll find the leverage multiple is much less as well. But this is just something we can talk about. You're exactly right. You pay less, but you won't get the leverage. You don't get the double digit there. But then when it goes up, then it goes up to this point here. This is a very critical point above the 50-day moving average, consolidates. We've got some other indicators that look bullish there. And then look what happens to those options there. At that point there, that breakout point there, that option, which was 32.56, is now 50.43. And it gets even better because then we get to today and those same options are now at 79.59. Now that's a 13% move in the SPY from there to today. But look how much the options have gone up from 32.56 to 79.59. So it was actually, you even got a better. You started off with a leverage multiple of 8.4, but you've ended up with 11, 12 multiple because you're further on deep in the money. The leverage multiple increases as you go on with time. So it's incredible. So you do a bit of what Graham's saying, a bit of what I'm saying, and you time the markets like we do, you are going to be in really good shape. Now, I always just say, just trade what you see. Stock selection is all about following what we call big money. Now, why do we do that? There's 6 big money footprints. These 2 here, no one else in the world has them. And we also look at key levels, cross and hold. I talked about being a lion, not a headless chicken. How do you be aligned? Well, wait for setups around those 50 and 200 key levels where they're not overbought, they're not overextended, or on the way down, they're not oversold. Why is that? Because the further up the mountain we get, particularly as it's gone parabolic, the more vulnerable we are to, you know, a collapse and getting whipsawed around. So if you can follow those big money footprints at the right time in the market and at the right time for those stocks, you get more consistent, you remove guesswork, remove overwhelm, save time, but also you're tapping into potential much more likely accumulation. And when you can tap into accumulation on the way up or distribution on the way down at safe levels, you have much better probability of getting to a conservative first profit target. And then once you got to the first base, that first profit target, then the rest is nice, isn't it? It's much easier once you get to the point where you can't lose. So how do we do that? Well, we have this indicator called the options volatility indicator, the OVI. This is where we're looking at potential position building, not unusual options activity. Everyone else is doing unusual options activity. And most of that, over 90% of that, is intraday churn, not that useful. So we're looking at what's more likely to be position building. Why? Because that's like accumulation on the way up or on the way down, distribution. So we got the patterns and all this. I'm not going to go into that. We haven't got time. And we got the actual empirical substance and proof as well. So we won't go into that. But let me show you another piece of evidence of accumulation distribution type of thing. It's called shrinking retracements. This is unique to us. I think I want to show you this really nicely. Here's Sarepta. Look at that move there. Okay, that move there is from 90 down to 62. Pretty nice, you know, 40% move. And then you get a little move there, right? And then you get a little move. You got three moves that are declining in less and less, you know, with less and less magnitude. And that gets interesting because what it's saying to you over different time periods is that the sellers might be beginning to run out of steam. And then you get other big money footprints starting to show up. Now, a lot of the time that will show up as a reverse head and shoulders or a head and shoulders, but it's really difficult to find because the time of the first retracement might be completely different to the time of the second one and the third. Third often ends up being some kind of consolidation. But now we've got big money footprints accumulating, and that's what it's showing us, is that that's potential accumulation. We see it here with GE. See the three arrows there, and you'll see the OVI changing color. This is on the way down. Hershey's loved this one on the way down last year.
Yes.
Shrinking retracements, but this time on the way up, forming what most people would see as a head and shoulders. It's not a head and shoulders. It's shrinking upward movements. Buyers are running out of steam. Here's Neo, same kind of thing. But look at the difference in time for each one. So one might happen in days, the other one happened in weeks, the other one happened in months. But what you can see is sellers running out of steam, buyers beginning to take over, and guess what? The leverage boys and girls getting busy on the bullish side as well. Now you're tapping into potential accumulation. This is what we like to see, and it's so exciting when you see it. Now align that with key levels. Why is that important? Well, it's not just because of Paul Tudor Jones saying that the 200-day moving average was the thing that you won't buy unless it's above that. It's just that you've got lots of eyeballs on it. And when you've got lots of eyeballs on something, you have potential increased supply-demand shifts and inflection points. And you're not going to be overbought or oversold at those levels. Up here, you are, but down here, you're not. And if you see these inflection points and big money footprints accumulating at these levels, you're more likely to be tapping into accumulation on the way up, distribution on the way down for several of these reasons. So when you put these things together with GE, this is GE, boring GE, doubles pretty much. Neo, a bit more exciting. You'd expect that to do something crazy. Hershey, boring, but did something very exciting on the way down. So let's have a look at the 6 big money footprints. And now you see the way that I will go through this. And all I care about is these, because I know I'm tapping into something that's much bigger. And that's, and by the way, no one else is doing it. So that's another big thing here. So let's look at Sarepta. Big money footprint number 1 is increasing volume. So volume acceleration, even before the prices really started to lift off. I like that because that means that that volume in amongst the other big money footprints might be accumulation volume. Now that's hidden. You know, the float won't change. The float will show nothing here. But in amongst these other big money footprints, that might be people hoarding. If they are hoarding, there's less shares around to be bought. So think about that. Then you get the price acceleration, big money footprint number 2. Now you know that something's happening. This thing can move. It can have an effect with that volume. Interesting. Then we get the key level cross. So that's a 50 or 200 or other key level that's important. And we're not overbought at this point, are we? So now we know that big players and alarms and alerts are going off all over the place. It's gone through the 50-day moving average. It's gone through the 200-day moving average. Let's look at this, Bob. What's going on? We need to be looking at this. It's gone through a key threshold. Nothing magical about it. It's just there's lots of eyeballs on it. That's good news. People are now paying attention to this thing. Then you get the scarce information piece. That's the OVI. That's where we see in a different way to everyone else that there's potential accumulation going on with the options situation. Now, if that is happening, you never know, but you're building a picture here, you're anthropomorphizing a chart. If that is indeed happening, guess what's happening? People accumulating those, and the market makers who have been selling the call options in this case, they've got two options to hedge their increasingly difficult situation as the stock price rises. A, they can buy calls themselves to mitigate their short calls, or they buy the stock, causing a hidden short squeeze. And it won't be seen, just like the float won't be seen, but it's a hidden short squeeze. They now have to buy in order to cover their short calls. Pretty interesting situation. Look at what's happening on the chart. You can see it all happening. Then we get another bit of scarce information, which is the shrinking retracement. The downward moves are shrinking in terms of their magnitude. This is really interesting, isn't it? Now you just got to find a great place to get in, i.e. the breakout of a consolidation type of thing above a key level. There you go. Now, these consolidations of price are also matched with consolidations in volume, i.e. shrinking volume at the point of that sideways piece of the movement. Then you know there's not much selling action going on, and the next piece of buying will thrust this thing up, because now you've got an anthropomorphized view of a chart. You go, there's probably accumulation going on here. The buyers are taking over. This is big money footprints, and that's why you got that thing with Sarepta. So when you ask what I like to look for, I just like to look for that. I don't care about anything else at any time. That's all I look for, and I want to find it quickly. And that's how I be a lion and not a headless chicken. I'm not chasing these things that are going to the moon. I know I will have my shot again. I know I just had my shot, and I'm doing great as a result. So that's my way of doing it. I mean, that's not to say that this is one of your guys. This is John, and he says, well, he likes what do we do. I'll just let you read that one. But I think it's really cool. Now, I want to just say one thing, if I may, if you give me some time here. At the moment, we're pretty extended where we are in the market. But I do want to kind of show you what I think is going to happen, because that was part of what I know that you wanted me to do today. So I just wanted to say, here's what's going on. So we had the move down from July down to October, and now we've gone up, done a bit of this, and now we're way up here. What I think will happen is, if you look at where the 50-day moving averages, it's way down here. What I think will happen is we'll come down to that in due course. Now, I can't give you the exact time. I'm not one of those kind of people. Even psychics can't give you time. Not that I believe them. But anyway, the point is that we will get a retracement. You just don't go parabolic on indices forever and ever. This will come to an end. And we're beginning to look a little bit frayed. I'm looking for a big reversal bar. We kind of got one 2 days ago, but we're still pretty resilient even after that. But I see that as the first sign, first chink of weakness that will come inevitably in the coming 3 weeks or so. And we will come down, and maybe it'll be 8%, or maybe it'll be 10 or 12. It'll depend on what the extent of these movements were from July down to October. But there will be market structure will form. And then because of the basically benign environment with interest rates coming down, election year and other factors that look bullish, once we get this retracement down in the main indices that are currently overbought, then what I think will happen, we'll either get some kind of consolidation, which is great, or some kind of reversal pattern, big reversal pattern, and then we'll steam back up again. And I think that 2024 will be a good year, but you will get another chance to get into it. Inevitably, things just don't keep going up and up and up. They just don't do that. At some point, they will mean revert. So that's kind of it from that point of view. I could go through some stocks, but I don't want to interfere with other people's things. But as you can see here, that bar from just 2 days ago, that was a bearish bar, and we've come right back up. But this kind of gapping up and gapping down is often a sign of tension. that's creeping into the markets. We saw it here back in July. We're still really strong on OVI. That hasn't weakened yet, so we're probably not ready yet, but this is just the first warning shot across the bows. This will not last forever, this upward move. So just be aware, don't chase. You will get your chance again with this. And I do expect some kind of, retracement down to some key levels at some point in time. And, again, I'm looking at this move, I'm looking at that move, I'm trying to figure it out as we go along. But until we get that confirmation that we're going down, and at the moment, that's this is your kind of support level. We've got to break down through that to know that we're going to actually go down, or to have a much better clue that we are. Until then, it's really difficult to sort of try and look into a crystal ball and say, oh, it's going to be 8%, it's going to be this, it's going to be that.
Yeah.
Trade what
Well,
you
very
see,
good. Thanks for
relax
giving.
into it.
Yeah, that's a really great overview. And this is what I wanted folks to have. And I love that software that you have there, Guy, for obvious reasons. And a lot
Well,
of
no, I can show you the best reason to like the
well,
software.
we're going to have to keep
is
moving.
this.
I'd love to see the best reason, but we are going to have to.
That's you there, Celeste.
That's not no. The best
What could be better
what I
than
love
that?
is that all that OVI stuff and that shrinking retracement and being able to, to scan on that. So it's really, really good.
Just give me 20 seconds more. These are a couple of your buyouts, Celeste. This is Sear that happened recently. Look at this. That's insider activity there, and that's what happened there.
Beautiful.
I got 3 for you. This is CYTK. Just happened literally yesterday. So that was kind of nice. A little bit faint, but that was obviously a nice one from yesterday. And there's one other Mertex that we had as well. This is one of yours as well in your buyouts column. But look what happened here. This is really interesting, isn't it? Lots of insider activity there, and then suddenly, whoom. That's the power of the stuff. Anyway,
It is
there you
beautiful.
go.
Well, and I was just going to say, I love the simplicity of those indicators that you have, Guy. Obviously, that's why I love your software, and I love using it just like you were showing. With the volume, just the money footprints. It just makes it easier to see things. But thank you so much, Guy, and I'm so glad that you were able to get on with us again this week. And I'm glad everybody that you were able to listen and see kind of what he was talking about and being able to visualize where that pullback could happen, how it's going to happen, how it's going to set up for great opportunities, really. And that's what everybody's been saying here today. So let's keep it moving. Graham, why don't you share some of the opportunities that you're seeing for 2024? And I think you might have a special ticker that people will also want to write down on this one as well. So listen up, folks.
Yeah, definitely. Well, if you've been following along with my work, obviously, I've been bullish gold, Bitcoin, and bonds, which is a little bit of a boring play, but it's been working out nicely for us. I think the people who took that TMF trade we had, it's a long-term positions up 100% now. So that's awesome. But I do have something new for you guys in the small cap universe. The ticker is CAVA, Kava, and it's right about lunchtime right now. So it's the perfect time to be talking about it. This is a restaurant that they have multiple locations, but they just opened one here in Jacksonville. And my wife and I are obsessed. We go like twice a week. It's amazing. It's basically your Mediterranean Chipotle. Now, here's why I love this stock. It recently IPO'd back in June. It's coming back up to those IPO levels. But here's what I love about it. Similar to Chipotle, this stock does not allow franchising. So it's all internal growth within. Now, this place is always slammed, always busy. But I think something that held them back last year was those high interest rates, a high debt expense. They couldn't afford to grow at the rate they wanted to. But I think going into this new year, as debt becomes cheaper and it becomes cheaper for them to expand and grow, we're going to see this stock really take off. And in a Chipotle, I'm calling it the Mediterranean Chipotle. Right now, it's about a $4 billion market cap. So it's still pretty small as compared to a Chipotle, which is 65 billion. So it's got a long ways to go, a lot of growth ahead. And so I'm really excited. I'm buying shares of it now and hoping to see it grow and expand all over the country. It's a wonderful restaurant. We love eating at it, but I really think there's a big, bright future for this company.
Excellent. Great. Well, and just that whole kind of small cap thing that you've been talking to about, and you're just kind of seeing continued opportunities on there. Well, how can people follow you, Graham? How can they get more information? I know that you've had some real great success and some great trades that you've been throwing out there, even for free, seasonality, all that kind of thing. Expand on some of that for the folks.
Yeah, well, I'm not sure if we can get a link for it, but I post everything in my Telegram. That's pretty much where I do all my communications. I try and give you guys as many free ideas as possible without overloading you. I give about one a week. We haven't closed a loser yet, which obviously the markets have been straight up, so that's been very helpful. But we've had some really, really good picks in there. So I'm not sure if DA can get a link for it and throw it in there, but that's how you can do it. Also at 2:30 today, I'll be having a class talking about trading Apple stock. And Apple's just had a nice little pullback contrary to the markets a bit. So I think it's a good time to be looking at Apple as a potential buying opportunity going into the new year. So that'll be at 2:30 p.m. Eastern today.
Nice. Great. Great. Well, we'll see if we can get some information posted there in the chat on that. So thank you for sharing that, Graham. And then let's find out about some more topics. I know, Graham, you've been in on this as well, or have, had this great interest too here with this cryptos, Jeffrey, that you've been bringing to us, and not only cryptos, but crude oil and market levels and timing and all of that great stuff, Jeffrey. And by the way, Jeffrey is on, Discord. What a great place for people. I mean, it's so organized. Jeffrey, the engineer of engineers, it's amazing. The content, the organization, it's fabulous. I don't know. You have to be an engineer to have all of the information that Jeffrey has tucked away in his brain. I mean, I can only handle a few things, but Jeffrey, he's got it's like all cylinders all everywhere. And it's obvious in that Discord. But anyway, I digress. Jeffrey, tell us more about what you think we need to know about crypto or crude or any of the markets. Take it away.
So, we hadn't talked about this previously because it just came out, but the fund manager survey that came out this morning, or last night, I guess, maybe, that caught my attention because 89% of fund managers are expecting lower bonds in 2024. Is the most popular trade right now.
Yeah.
Never in the history of anything has the consensus most popular trade worked out. So we're going to see higher prices in bonds in 2024, more than likely. And that really caught my attention this morning. And I wanted to bring that out here and talk about that. Plus, what can happen here with, I know Graham saying that he loved the fact that Jerome Powell calling out, saying we're going to cut rates and all this, but what happens if he can't cut rates? What happens if oil starts rocking inflation back higher and they just cannot? I mean, we saw this historically in the 70s where they declared inflation dead and then it came ripping back and it just tore everybody up. And so we may have only been through the first act of inflation so far. We're kind of floating through the second act. Everybody thinks it's all clear prematurely. But what if it comes roaring back? What if we get, right now with the levels of gold and oil, gold typically is about 20 times oil. Right now we're running about almost 30 times. So that means oil, black gold, needs to ramp right back up. And that's going to put oil at about $100 a barrel to maintain that historical ratio. And as gold, the yellow gold pushes its way on up even higher, that means black gold, oil, is going to ramp up higher. And, these, as Guy Cohen was saying, these things tend to revert to mean. These ratios and things that have historically been in the markets, we tend to revisit them often. We don't necessarily hang out there forever. But we could see, a rapid appreciation in the price of oil, and it could put a hurting on a lot of things. Yeah. One of those things, like, maybe, since we redefined recession and we didn't have one, that's neither here nor there. I think if you take the inflation numbers out, we actually are still negative GDP. But if you look at it, we may go into a depression heading on into 25, 26, possibly. So 24, I do expect higher prices across the market. And I didn't want to bore everybody with, throwing up charts here and there. But, crypto, it's going to be a big play here in the next few weeks and to probably continue into 25, just like we've seen in the prior halving events for Bitcoin. Why focus on Bitcoin? Because it's more than 50% of the market cap of crypto. And that's the one to focus on. Why focus on anything else when the one dominates? So then you've got AI too, which is kind of taking a back seat the last couple months. We're seeing NVIDIA kind of bouncing at the top. And, there's some other players that are, AI is kind of like that stage in the 90s when we were looking at the internet and we were like, oh yeah, the internet, that's going to change the world. Everything's going to be awesome. And then all these .coms came on the scene and tons of money flowed in. We saw crazy bubbles. We saw the Fed start raising interest rates And then all of a sudden we got a panic in the early 2000s, and a lot of these companies went out of business.
Yeah.
And you know, it's one of those things, like AI is going to play out the same way because all these trends and fads, they all play out the exact same way. So don't think you're late to AI yet. I think the leaders that we're going to see emerge 20, 30 years from now, they're not even like a thought yet in how this is going to play out. So if you think you're late to AI, just chill, be patient. We're going to have some awesome plays come up on the years coming down the road. Hopefully I'll be here talking about them on Ask the Pros with you, Celeste.
Yes. Yeah, no kidding. Yeah. And I love how you said that too, lots of opportunity, and you're just like, there's always opportunity in the markets, right? And you find them, and you find them because you have education, and you have tools, you have ways to do it. And Jeffrey, we love having you come on, and all that expertise you're able to provide with that, with all these different markets. How could people, learn more with you on cryptos, on crude oil, on gold, on any of it? Oh, you just posted it right there. Reading
I was ready.
You knew what I was going to ask.
Just
Yeah,
go to my
Jeff.
YouTube channel. I throw this stuff out there every single day. I actually update the indices, gold, oil, and crypto every single day on YouTube. Every single morning I run through it. Maybe you don't want to update every day. You can check in with me once a week, once a month, whatever it is. But I go through them every single day, looking at the twists and turns. Guy was heavy into the price action. I'm heavy into the price action with my technical analysis. And it's amazing what the charts will tell you where we're going.
Yeah.
And I just happen to get lucky more often than I don't. So
Oh, there's a little bit of skill in there. Don't be too humble there. So
As Peter
there's a
says,
lot of
Jeffrey's a
skill in
wizard.
there. Jeffrey is a wizard, and you may think that's a Santa hat, but it's actually his wizard hat. And I got to tell you what Bodine said. Bad. He was saying when you were talking, he said bad Santa, talking about depression while wearing a Santa suit. That's well said, Bodine. So, but yeah, checking out, the YouTube, and I think, this is really giving people an opportunity. Everything that we've talked about, giving people an opportunity, some things that they can even check out next week. If you all are a little bit, on holidays, or, staying out of the market, and, doing some different human activities, different human patterns, checking out some of these YouTubes of Jeffrey's, checking out some of these papers that Graham has put together, checking out some of the software there with Guy Cohen. That's just a really great use of time, because that's what helps give you that skill to get in there and to do it calmly, without all that trader emotion. You're anticipating these different moves and everything. What are your kind of last thoughts? Guy Cohen, are you still with us? What are some of your last thoughts heading in to this last day of the market before we head into the holidays? What are your thoughts? What are you looking at? Are you noticing anything unusual even today, or heading out? Just kind of final thoughts. Jeffrey, why don't you go first?
Oh, me? Okay. Well,
Oh, Guy's with us. Go ahead.
yeah, guys there. I usually take it easy this time of year. I start looking at my accounts. Is there anything I was doing that consistently lost money? Like you said, when it's a kind of a downtime, stop and evaluate. What have you been doing? If there's anything that's consistently losing you money, put it on the penalty box. Maybe switch it to paper trades. For me, that's historically been. I've got a couple tickers that I just don't trade because I've historically lost money more than I'd like to admit. I mean, one of those is Lulu, LULU. Another one's Meta. For whatever reason, me and those stocks just don't get along. I consistently lose money every time. So they're in the penalty box.
They're on the naughty list.
Yeah.
So I mean, that's a good way to improve your trading, is just to cut out losers.
Mhm.
And you start there and work your way up. Like, what's the stuff that's making the money? Focus there. 80-20 rule, spend 80% of your focus on the 20% of stuff that makes you the money.
Yeah. What do you think, Graham?
Yeah, well, on that note, it's a good time to tax harvest too. If you got anything long that, hopefully everyone had a great year as the markets were ripping pretty hard. I know I had my best year yet, but good time to take some profits. But I'm just kind of like Jeffrey. I'm taking profits. I want to take it easy. I don't want to be on my phone over Christmas wondering what's going to happen. I want to be out taking profits, enjoying the holidays, and let's get a good start to the new year. Obviously we'll get a little bit of trading next week, but really just looking forward to 2024. But yeah, taking it easy, not opening too many positions. Like Guy said, we are pretty overextended. You don't want to be over leveraged one way or the other.
Yeah, be smart. Be smart. That's really good. How about you, Guy? What do you think?
Yeah, same thing. I mean, I could show you a couple of stocks that look, vaguely interesting, but when you have a
You got a little bit of time
volume
now. If
market,
you want to take some time, Guy, and show us those, you could do that right now.
oh yeah, I might as well. You just want to see your face again. That's what
I do.
know.
I do.
Yeah,
I
you just want to
that
see
person
that.
that
It's all about you.
I want you to show everybody those great trades I've been putting
It's
out.
just all about you. I know. And no, so
not about me. I mean, really it is, but I mean, it's not, but well, I'm just kidding.
I know you. I'm kidding you.
I know.
I got to be careful though, because because Graham's here, and I don't want to upset. I don't want to.
Sorry. He
Being nice to your
better
mom,
not,
Graham. Okay.
yeah, he better not be texting during Christmas dinner. He'll be put in the penalty box.
Yeah,
I
don't worry.
know.
I'm being respectful. But anyway, it's this sort of setup that I like to see. Tight consolidations just above a key level. You can see big money footprints flash up here. The only issue is that you're going into a lower volume market where it can go either way, and especially in an overextended market, the chances of whipsaws are way higher. But I just want to show you the kind of things I look at, and it takes me literally a couple of clicks to find it. There's another one. There's Cognex, bursting out from a key level, looking interesting. A few big money footprints showing up there.
I see a beautiful pattern right there, Guy. It's just instant. I see it. It's gorgeous.
Yeah, and it's really, and when you start seeing the shrinking retracements as well, that'll pop up in one of them. You'll see it flash up, and to find these things is amazing. But this one, if it can get above the recent highs, could be interesting. I also like to see stocks with low implied vols, because I know I'm going to get bigger bang for my buck in terms of the options. They tend to be more liquid. I like the liquid options with the tighter bid-ask ratios as well. There's Camping World. That's got to be classy. Let's have a look at CYTK. That's already gone. That's one of the buyouts from Celeste. This one here, it's a little extended. It's just below its 200. But again, I like what it's trying to do there. Let's have a couple of other. And this took me literally about a couple of clicks to find these ones. Fortive is looking strong. It's a bit whippy, but it's looking strong. Look at all that activity there. And this is it's just so cool that you can see the activity and then you can see the move. Now you see the consolidation. It's a bit messy, but this does correlate well with its OVI. That's what those stars are about. You see that lovely pattern recognition in here saying it's a bull flag and a consolidation as well. These things are golden for us to create low risk trades where we can define our risk from the outset. Let's have a look. Just a couple more before we go for a little Christmas run. There's another tight consolidation there. It's a little bit boring, but tight consolidation there. IWM, Graham, I love IWM. I just love it. I mean, this move here, I just want to show you. We can talk, Graham. We can talk off camera. Okay, that move there, look at this. It really reacts well. OVI negative. Going through the support of the 200, we're all over this, by the way. We already identified highs here. So we're already bearish on this situation. That move there is 10%. But on the deep in the money, even on the 80 delta, longer term options, 4 or 5 months out, that was 100% move on those. Just on the IWM options. So you didn't even have to go 2x, 3x, because look at the implied vol here. It's tiny. It's like 16 at that point. So what that meant was that even with deep in the money, it meant that your leverage multiple was 7 or 8 times, going up to 10 times as the stock went further, deeper and deeper in the money with those puts. Mertex we did. Let's have a look at that one. Another Celeste beauty there. This one's one we've been in already, but look at what we look for here. Look at that and look at that consolidation right above a key level OVI, and then look at the move there. And it's cheap options there, nice and liquid too. So and it's doing it again now on the 200. This Omnicom as well. This one, I mean, I hope you can see it. There's one, there's one, there's one. There's this consolidation there. You do see the market structure there, the market shape, but we're able to sort of deconstruct it take the apple pie and then just remove the apples, the icing, the flour, the eggs, and we're removing it and we're seeing what's actually making that apple pie, if you like. We're deconstructing it, and it's kind of doing it again right now. But look how many chances we've had to go into there. It's a lot. So you've got one consolidation in here, you've got another one in here, and now you've got another one in here as well, looking like it's happening. And of course, the options guys and girls are all over that one.
It's just
And
beautiful. I got to
basically-
just jump in, Guy, a little bit and just say, again, this software really makes it so easy to see the opportunities. It just really does the heavy lifting. It should be called Gorilla, I think, because it really does the
Yeah.
heavy lifting for you. And I just got to say again, it's like when you get used to it and looking at it, it's like, wow, it's just the patterns just jump out at you. It's phenomenal.
It's very, very cool. We can do it another time. But by the way, just so you know that I'm not kind of cheating here, these are the times where I've mentioned it from 18th of November onwards. Even got a thumbs up from me. So you're right in that lot there. And that's pretty decent move.
Yeah.
There it's not like exponential, but look again how cheap those options are. And then you get to see a 5 and 6x leverage on that one. Just a couple more, just so that it's Christmas and all that. This is another one. I hope you can see. Sorry, I pressed the wrong button there. But I hope you can see now when I look at pi, just look at this. Just look and see how really beautiful this is. Earnings, which often a catalyst for big volume and jumps. We love that. Then a consolidation, then another. OVI is all over it as well. And that's what you got. It's really nice. And it's kind of almost shaping up to do it again, but with the caveat that the markets are overextended right now. Just a couple more and then we'll be done. But again, this one seems to be interesting. Medicines and those kind of stocks are interesting, but this is showing shrinking retracements and flags and consolidations there. It's poking up, but what it's probably doing here is something along the lines of, I'm just trying to think, something to do with that and something else. I'm just trying to find which shrinking retracements it's got, but selling action obviously drying up there. Starbucks the other way. We were bearish on Starbucks, and look at these lovely pattern recognitions there, showing bearish big money footprints. This is a waterfall setup. OBI is negative. There's selling action in here as well. This is a stock that has tumbled down after earnings. It went up at earnings and then immediately rejected and then does this. This is a really nice bearish situation. It's called a waterfall setup. So it goes up, hits its head on that 50-day or that key level, as we call it, with the negative OBI, with more selling action, and then just sort of doesn't have the chops to keep going.
Hey, great
even
question
in the
here.
face of a strong market.
I want to ask you real quick, and KP has a good question to ask your thoughts about Pfizer, because actually I happened to notice Pfizer is a top stock this week.
Okay, let's have
just
a
on
look.
strength.
I'll put it in PFE. Sorry.
PFE. Mhm.
Let me have a look. I haven't. It's not on my radar recently, Pfizer, because it hasn't turned up with something that I gravitate to. So I think it's really important, and I think Graham and Jeff have said some very important things, and that is they're different to me, but they specialize in a different way of looking at the markets, which is totally legit. I specialize in my way. I've developed this over 30 odd years, but other people develop their own things, and when you have a bit of ownership of your own technique, provided it's not to the exclusion of results, that does mean something in trading and investing. It means that you feel a little bit more ownership of it, a little more control. So the answer to Pfizer here, it's not doing anything right now that I particularly gravitate to. If you look at the setups that I see, it's not just one of mine. I'll just finish off a little bit. And by the way, it doesn't mean there's nothing there. It just means there's nothing there for me.
Yeah.
We did that one as well. Hang on, let's do a couple more and then we finish off. This is Terex. This kind of movement often happens at earnings. It wasn't. Earnings is back here, but you've got a consolidation going on here. It's it's kind of got on my radar, but I'm probably not going to do anything with that one. And then we got Tapestry and Texas Instruments. Those are the last ones. But Tapestry, I hope you can see why I might have liked that after earnings. When the OVI turns, it goes above a key level, it consolidates once and twice. I hope you can see that's my kind of gig in that situation. And again, it's all about, big money footprints is a lovely way of expressing it. But what are we really talking about? We're talking about a much better chance of there being an accumulation on the way up, or a distribution on the way down. And if you do manage to catch a ride on those kind of situations, then obviously you get the moves that will take you to into the trading plan here, your first profit target with much greater speed, much greater probability. And once you're at that first base, well, then you can relax, and then you either take your profits there, or you get stopped out, but at least it's with profits, or it goes on a trend. And if it goes on a trend, there's another mechanism that we have to ride that trend. And obviously that mechanism accelerates if you have deep in the money options, or options that are getting further and further deep in the money. So this is just the way that I like to do things. And then lastly, there's Texas Instruments, which was a dog for a while, although I have to temper that because I love dogs. So dogs are a good thing for me. But look, down here, no good. And then suddenly we get earnings. We get a big move up. We get another big move up. Then we get a consolidation above a key level. And oh, guess what? Options traders are into it now. And now you have a breakout area. And you kind of got something else going on there a little bit now as well. And again, look at those options. Nice.
Very interesting.
20 odd implied vol. So, and by the way, I want to, how I found those was ridiculously easy. I clicked the button to find consolidations near key levels with an OVI. And I put them together, I pressed 1 because I already had that as what we call a fast filter. So I think that just one other thing I want to say about trading is
okay, and then we're going to have to go because we have to go. But
it just needs to be easy to do. That's it.
Yeah,
Sorry, guys.
It does have to be easy to do. And that's what keeps us coming back, is if it was like, but anyway, let's keep moving. Final thoughts before we go on these holidays. Jeffrey, send us off. Graham, send us off. Final thoughts. What do you think? What you've seen, what you've heard, what you're doing?
Hey, first off, I want to say thank you, everybody, for being with us and following us through 2023. And I look forward to working with everybody in 2024. Celeste and Graham and Guy and all of you viewers out there that make this what this is. I mean, honestly. And let's hope for a freaking pullback, like Guy says, because then it's going to clear up a lot of stuff in the market. I mean,
wait.
I hope we get it.
Yeah, me too. That'll be a nice Christmas gift, won't it? All right.
Awesome.
How about you, Graham?
Yeah, no, if we get that, great buying opportunity, but if not, keeping all bulls on over here. Like Jeffrey said, hopefully we don't cause too much damage in the 2025 and 2026 years from the decisions made this year, but we'll see what happens. But I think you've got a good send off for us too, because January is historically the biggest month for fund flows into stocks.
Oh yeah, baby. Oh yeah. I'm going to be talking about it at 1 o'clock. I'm going to be live and so much more. The conversation carries on. Lots of great detail to get. And you're exactly right. I can't wait to share it with you all in 10 minutes. So, all right. Well, it was great having everybody with you. I'd agree with what everybody has said in here. I love this. Timothy says, let's make more in 24. I like that. Let's do that. Merry Christmas to everyone. Dennis, everybody. Thanks for sharing that. And a brilliant Christmas from Peter. He says, over from across the pond, Guy, just like you. So anyway, it was a great session and worth really taking notes on, checking out some of those tickers, some of those ways to make money. Join me in just a few minutes and I'm going to talk more about what's going on underneath in the market that I think will help you make better decisions in 2024 so we can make more in 2024. That's a good slogan, guys.
That's a good slogan.
I might have to steal that one. Anyway, all right. Merry Christmas, everyone. Have a great rest of the day.
Merry Christmas, all.
Thanks, everyone.